Interest rates continuing to spook investors with the VIX hitting its highest level since July. Major averages are back in the red. The Nasdaq, the worst performer, down about 0.6% after coming off its worst week since March. Joining us now here at Post 9 is UBS Director of Floor Operations, Art Cashin. Art, great to see you today.
Thank you. Good to be here.
It's actually Columbus Day. It's a holiday. Bond markets are technically closed, but is this what's continuing to drive the action to the downside in equities today, this rise in rates?
It is, and not only the rise, but the rapidity with which it occurred.
Yeah.
And we've achieved the long talked about 3.25 level, and the next is going to be 3.5, and then, believe it or not, 3.75. And I get that from people who are much better at charts than I am, like Barry Habib and whatnot. So. The key resistance probably is up at 3.75, but I think if we move to 3.5 and through, it will send a little bit of an electric jolt through the market. The concern is, will the rates go up almost on an automatic basis? That Powell had taken them to where we are. It's going to be interesting. He's trying to get away from the dot plots. He's saying we'll take the economy as it is. We'll look at it from spot to spot. There's no sense speculating that you need to raise rates another half point in another half year. But that having been said, the dots are still there, and you're going to need him to come away. I think what the viewers should also watch very carefully, they resurrected the old hypothesis that the Chinese may be backing away, and that's helping rates go up. Chinese have been a big buyer of U.S. Treasuries. We have a 10-year auction coming up this week. It's going to be very interesting to see what kind of bidding we get on that. Do we get external bidders, people from offshore? If they're much lower than normal, that'll respike that Chinese rumor.
So on the one hand, you got these rising rates, and they're rising very quickly. Increases borrowing costs, incentivizes investors to get out of riskier assets like equities, for example. On the other hand, if you have rates rising because of strong domestic economic growth, is that a good thing?
Well, the theory, there's been a lot of debate, even on your network, people saying, well, it's okay, they're going up for the right reason. But it is a level that you have to worry about. They could be going up for the very right reason, but if they're going a little too fast, this economy is, on the face of it, very, very robust. But it wouldn't take too much to maybe trip up a few sectors here and see the retail area, other areas. Christmas is coming. You're hearing about difficulty hiring, maybe not servicing everybody. So there's a lot of question marks out there. Now, the Fed, the market's convinced the Fed's going again in December, but I think they would be well served if they would get across the fact that they're still watch and see. If the economy remains strong, we'll consider it again. We do not have a definite plan at this moment.
It sounds like you're edging into the territory, Art, of saying that the Fed's on the brink of going too far.
I think they are. I've been a bear on yields, if you would. I'm kind of surprised that we got here as early. I thought we'd get to 3.25, but we're about a month early on my look, and that brings me concern, because I think then the market may begin to outthink itself.